there would be huge fluctuation of the price of Bitcoin. Hey guys, it's Eric from Hong Kong based in Germany. I've been investing since I'm 17 years old for almost 20 years. I want to give you guys alternative perspective about investments related to Asia. Today I want to talk about, is China going to crash Bitcoin? Bitcoin has fallen from its peak for more than 50% since April. In fact, we now see the death cross. The 50 days moving average is now lower than the 200-day moving average, which is a very bad sign. China's action is certainly contributing to it a lot. So what did China do? Why China did it? And what are the implications for Bitcoins? So what did China do? As far back as 2013, the Chinese government already started cracking down on Bitcoin. In fact, in 2017, it closed all the exchanges for Bitcoins and other cryptocurrencies. More recently, the wave started in May this year, when the Chinese government ended trading and started to crack down on mining. You need to understand that China accounts for 65 to 75% of the Bitcoin mining capacity worldwide. So when the crackdown started in May, it was for Yunnan province, Inner Mongolia, Qinghai province, etc., which are the biggest provinces for Bitcoin mining, except Sichuan, which is rich in hydropower. But on the 18th of June, the last safe haven, Sichuan province, also cracked down on the 26 largest Bitcoin mines in the territory. And then only a few days later, on the 21st of June, Chinese central bank warned the biggest state-owned banks, for example, ICBC, CCB, ABC, ABC is Agricultural Bank of China, and Alibaba's Alipay to start to identify and to block any transfers related to cryptocurrency exchanges, offshore middlemen, and also peer-to-peer traders. By the way, all of the companies mentioned are all listed on Hong Kong Stock Exchange. I create videos from time to time to give alternative perspective about these Chinese companies. For example, ATMX, Alibaba, Tencent, Meituan, and Xiaomi. So remember to check out the link here above or in the description below. Back to the topic, why did the Chinese government did it? Well, first of all, there's the risk of money laundering, which is the same as the rest of the world. Secondly, there's the financial stability risk, because many things happen with the cryptocurrencies is beyond the control and monitoring of the government, which is quite unusual for China because it is still technically a communist state, and the government is still pretty visible in a large part of the economy. The third point is more specific to China, to avoid the outflow of assets. You need to know that the Chinese currency, renminbi, is not freely exchangeable. There's capital control in place to avoid moving money in and out of the country easily. That means that there's a headache for Chinese government when Bitcoin and other cryptocurrencies allow this to happen. And this could potentially destabilize the exchange rate, which is controlled by the government. Nonetheless, the next point about Chinese investors affect you guys directly. Because without China, such a big market for Bitcoin, which is the biggest market for everything basically, it would be difficult for Bitcoin to be a legitimate global currency. The third point, and probably the most important point, is that 65 to 75% of Bitcoin mining comes from China. Heavy disruptions mean that, first of all, there will be huge fluctuation of the price of Bitcoin, which is happening at the moment. And we will be very dependent on the action of the Chinese government. By the way, if you want to keep track of the latest news about Bitcoin in China, and also on alternative perspective of investment related to Asia, remember to subscribe with the subscribe button below. Even better, click the bell button next to the subscribe button so that you won't miss out. So where we are. Oh yes, the second point, if there's a disruption of mining. Well, we are talking about 75% of the mining power. So without this kind of processing power, transaction would take much longer. We're talking about weeks. And this would affect buying and selling Bitcoin. Well, the third point is that the rate of creating new Bitcoins would be much slower. Well, it sounds like an upside potential, right? Less Bitcoins, value goes higher. Well, but in general, if you have processing power of 75% gone, I think it would do more harm than good. Well, the fourth point is that if the processing power of 75% worldwide, which means in China, are being stopped overnight or within a very short period of time, or even the Chinese government sees them, then we might have some kind of security risk, right? Because we would have less than 50% of the computers still online. This could be devastating. But of course, I think the risk is very low, I hope. So what do you think about Bitcoin and China? Are you going to wait and see, or are you going to buy now? Leave me in the comments below. If you like the video, remember to subscribe and click the bell button next to the subscribe button. It would be very helpful for me to continue to making more videos and better videos.